Stephen, can you drop a link to YouTube into Discord? Good morning, traders. Welcome to the TraderLab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream is about integrating Bookmap order flow tools with auction market theory, using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are shared freely in the Bookmap Discord TraderLab community, and you're all welcome to the TraderLab. There's no cost for TraderLab. It is a community of like-minded traders who've come together to leverage their collective experience. There isn't one way to trade, and it doesn't matter how long you've been trading. What does matter is that your objective is to actually create a sustainable business in the trading business. And if that's your goal, no matter how long you've been trading or what you do, you might want to visit TraderLab. I can assure you it is not a typical community or chat room, and it is really a serious opportunity for developing traders to learn the business and understand actually how this business works and also market mechanics. So if that's your interest, use the link in the bottom of YouTube. You're all invited, and there is no cost for this. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, and this is for educational purposes only. If we get into real time, we might talk. Also, I want to invite all of you to review the past several streams for the last few days. You can see how everything builds and overlaps on each other. One other thing I want to make as a point is I'm streaming from Costa Rica, and this is a very unstable environment, as well as my laptop is clinging by its nails to the edge of the cliff, so I'm having hardware problems too. So if I drop out, I will restart and try to get back, and if you're in YouTube, it'll take a few minutes and hopefully it'll come up again. Again, thanks again. Appreciate you visiting TraderLab. Now, let's get going. Let's get together and see what this market is up to. Now, first of all, this is the RTH, and this is Friday's all-time high. Do we get the champagne out? All-time high, 70.17.5. And what that sets up here, I want to give you just a little sense of an overview. Now, everybody does this differently. I call this, and this is named a micro composite. These are individual RTH candles, and you can see how the market was going down, down, down. Well, in market mechanics, and this is really important. Now, in the profile, this little red line indicates low volume. The way you might want to think about it, and you guys might think about it in a similar fashion when you have a tail. But the thing about a tail is, why did we get a tail here? It's because we didn't spend time. And there was demand at this outside edge, and then the little body is up here. But in the profile, we can see something similar, but it manifests itself differently. It's based on volume. So this red line is the lowest volume between this distribution, which is from over here, and this behavior up here. So this is an outside edge. And if you followed the stream, you know this was our target coming down. Now, so what I do for microcomposite, and this is always subject to the flavor of the month or how you want to see the market. There is no rigid process. And this is why as day traders, we kind of define what speaks to us. And the way I experience it is, what do I want to see? I want the detail, because I'm trading inside of this. I can look at higher time frames. I can see anything I need. But if this is my world, basically from there to there, that's all I need to see. And what it shows me is high volume levels, low volume levels. And as I go further outside, this is the low volume. But inside of these levels, you can see I have low volume here, high volume there, low volume there, high volume, low volume. And this is what an auction is. An auction goes from low to high to low. So I can take this down into the composite, which is like an intermediate time frame. I can look at the daily RTH candles, and inside of these RTH candles is the same behavior. In other words, what's too low, what's too high, and this happens in all time frames. Now, the other thing that's important here is concept. How does the market work? This is not rocket science. It's just that we typically, as traders, we get all hung up on the minutia. Well, we do need to understand the minutia, but we cannot get down here with an electron microscope and get too myopic. We have to always remember the condition of the market. So what do we know about market mechanics? The market rotates over itself. Let's look at this from the RTH. Shorts, 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 shorts down to a target area. Now, what do we know? If the market is short, there's buy stops following the market. Intraday in different time frames, and let's use the term rotations, there are different participants on both sides or either side of that rotation, whether it's a 15-minute, 30-minute, 60, figure it out, right? Well, when we go to the RTH, daily RTH, there's going to be shorts in here. We get too low, and the reason we have a wick also outside low volume is we didn't spend time there. Why don't we spend time? Because there's absorption here. So the market, if the price is down here and we leave it, let's go back to the shopping analogy. Maybe that price is too low. You know, you go to the store and it's on sale, you throw 10 in the cart. Well, they raise the price back up. And this yellow line represents the highest volume in this day. Well, if it's too low out there, and this is a retail price here, what happens if I gap higher? Does that mean maybe that's too low? Maybe that's too low? And then where are the buy stops? Let's come back to market mechanics. There, 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 and there. So if the market goes up to go down, the market goes down to go up, the market goes up to go down, and the market goes down to go up. All time frames and rotations. I hope that makes some sense. By the way, if you have questions, please post them. One moment, and I'll do my best. So let's go take a look. Let's start what we know. We know the market's in an uptrend. We know Friday we made new all-time highs. Now we're going to go to our context grid sheet, and this is available to you in the TraderLab. And this is going to be the RTH open. First of all, context grid sheet, TraderLab. So we are opening in range, and depending how you slice it, maybe in value. This is the, let me get, hold on. Got to make sure I got the levels right here. Here's yesterday's low, ETH low. So, and I think, okay, value area low. Okay, outside of value, below value. Okay, so we're opening in range outside of value in an uptrend. This is the value area low. Okay, so if and this is the ETH overnight volume point of control. What this is the retail price from the last auction. So a point of control is just another word for retail or high volume. You go to the store, buyers and sellers agree to do business, that's the fair price. But what happens if in the ETH low, which tested yesterday's low, look at the pieces, is too low. So we come down here and then we get our buyers. Now and then the ETH high is above us, way above us. So we might surmise, if we understand market mechanics and shopping, that maybe this price is too low. So before the market opens, I already know maybe this is too low. And what is the other thing? Let me get this. It's a little hard for me here, just be patient. So this is today's open. So right here, now I'm opening in range outside of value. Hold on a second. So it means the market is a little bit out of balance. And then what? Well, if we're in an uptrend, then what do we look for? Well, we have to see if we're going to get profit taking from Friday or if the buyers are going to come back in again. And of course, we don't know. So the first place we would look is here. Why? Fair price from the ETH. And what suggests this is too low? Because it was already checked in the ETH. So I already know coming in that this might be a test, and I can come out and go here. So and the reason I know this is because statistical probabilities. So I'm opening lower inside of yesterday's range. Now I'm going to give you some statistics. Now in the TraderLab, the idea of the TraderLab is to create statistical probabilities and edge. The thing about trading is the environment is random. So we cannot predict anything. And a trader is not somebody who predicts something, because that's a rigid process. A trader is somebody who seeks to identify behaviors and structured processes that might define direction as quickly as possible. The other part of that is knowing where your trades might show up and having a vetted, structured trade plan that you can then wait for your trade, like waiting for a bus, and then engage. And then the outcomes are going to be random. It's strictly a gaming process. Probabilities versus randomness. Randomness doesn't go away, but probabilities, neither do they either. So if you have a plan and you have a positive expectancy for certain behaviors over time, assuming you execute the plan, and that's what requires discipline, which most of us have a real problem with because of our emotional stimulus, another conversation, but it's in loads of my streams. If we can do the execution, accept the random outcome, and just go on to the next trade, and instead of experience it like life or death, and I'm using that term specifically because emotionally we do experience it like life or death because we're wired for that, and we cannot tell the difference between life or death or randomness. That's where your emotions come in. So what we want to do is we want to develop an understanding of our emotional states and the business we're in, the things that trigger emotional states, the obstacles we have, and then probabilities of one thing happening over the other, and accepting we don't control anything outside of what we do. And then it's up to the random behavior of the market. I hope that makes sense. Are you guys following me so far? So now let's look at the RTH open. So we're opening lower in range. Grab a pen and paper. Just take a couple statistics down. So we're opening in an uptrend. We made new all-time highs, and the ETH tested yesterday's low, and we're opening above it. And again, anything can happen. This is the last auction, the ETH, and that's the retail price. So Tom, you ask, what is the possibility or probability of testing that level? It's about an 80% probability. So that means I got to be very careful here, right? We have about a 69% probability of checking the ETH low. Uh-oh. Well, those are all not too far below. But the context, which is nothing that you're ever going to find on some sheet, that's something a person with intellect and understanding and logic will already know. We're in a bull market, right? Higher time frame is up, new all-time highs Friday. Doesn't that change things? So let's watch the story. So the previous point of control, which was the high volume price from Friday at the new all-time high, is there. That has a 68% probability. What do you think of that? And then the ETH high has a 55% probability. Isn't that a problem for us? But wait a minute. There's a 97% probability we'll take out the previous ETH high or low. Now, the ETH low already tested yesterday's low. Let's, as they say, put our thinking caps on. If we're in a bull market, if we made a recent new all-time high, don't you think, in spite of just statistics in a vacuum, that the ETH high, which has almost a 98% probability, might be what you would target? And yesterday's high or low, and it's always open, guess what that is? 87% probability. Which one do you think is more possible? Yesterday's high or yesterday's low? This is TraderLab, and these are statistics. After that, all bets are off. Is everybody tracking? Now, let's get into the RTH. If you have questions, please post them. I'll do my best. If I can't answer them now because I'm having challenges here, I'm running on one monitor in Costa Rica, and I'm in a very difficult situation here with hardware failure, and just being at the edge of the jungle just makes it challenging. By the way, in Costa Rica, the entire country, I was trying to buy a new laptop that meets the specifications. This thing is like a Ferrari, and it's not available. And I mean the country, in the country. So I found that pretty interesting. So I guess if you need a high-end laptop, this is not the place to shop for it. Just because I know you wanted to know that. So this is the RTH open. Remember, we have a high probability of going here. Last retail price, RTH open, and it's possible for two-sided trade. Let's look. Now, these are structured trades, some of them, and I'm also going to share advanced methodology with you. This is not a business of worrying about advanced. This is a business of worrying about, number one, survival, and then sustainability. When you get to sustainability, now you have the opportunity for profitability. So it's really a building process. And this is available to all of you at no cost in TraderLab. But you got to put the work in. There's no plug and play or secret sauce. Everything I share here, none of this is held close to the vest. Somebody can show you exactly what to do and you won't do it or won't be able to do it. And the reason for that is you got to find your groove. Now, what does that mean? Your psychological comfort with the rotations or time frame you operate in. Most of us developing as retail traders think a short time frame, we can get more activity, more dopamine, by the way, and more profit. And actually, in my opinion, at least my experience, and it's going on 47 years of trading professionally and out here with you, it's the opposite. Less exposure to risk, better managed risk, more range. That creates something called risk-reward ratio and does also give you the opportunity to pay for the stops. Now, what are stops? Is it a personal failure? Or is it overhead and cost of production? If you have a statistical edge, a stop is just testing a location. And as long as you know that's where you're supposed to be trading, you may still get stopped out and the trade completely collapses, which is the reason you use a stop, or you just get nicked out and then you put the trade back on again and you see it as a random distribution of outcomes. How do you experience your trading? If it's revenge trading, I got to make dollars. FOMO, chasing, waiting for confirmation, in a very kind way, I want to say to you, you're on your way out of business. So we all do that. It's what can we do to change it? So this is the open, RTH open, and we get our driving behavior. Now, this will be a bit off because I'm in Costa Rica and I have data lag at times. So the market can open, and by the time we know the market is open and the data is here, the market's already moving away. But this is the actual RTH open. It was right here. So this is called VPOC migration, volume point of control, highest volume. So if you equate trading to shopping, which is the way I experience it, because instead of it being this strange esoteric thing that nobody can put their finger on, well, you already trade in the store. The time frame, though, is very high. Prices don't change much. But there's a sale price, and then there's a price that's too high where you won't buy it. And then there's a retail price where everybody agrees to buy it, right? Well, that's what's going on here. What's too low, what's too high, and what's fair. The yellow line is where the highest volume is at any time in this time frame. And the way, remember at the top of the stream, what does the market do? It rotates. What's too low, what's too high. And because we're in a short time frame and there's no clock here, the thing about dealing with order flow and using it to get an advantage over other traders is the clock is not relevant here. Okay, so let's get going. RTH open, what's going on? Resting liquidity is here. What is that? Sellers. Okay, this is the heat map. It's a great tool. I don't have to look over at the DOM or the limit order book to see where the passive orders are. So I know I have sellers here. And they're probably icebergs, you know. So let's see the reaction. Now, the red bubble is delta. Those are aggressors, and that could be sell stops or market orders. Don't know, not important. What is important is what happens here. If I have sellers here and the market doesn't go down, here's what's going on in delta, and that is buyers are here absorbing this. I get my buyers above my sellers, but where are my sellers? They're up here. So I get this behavior again, and you'll notice that the sellers here, the bubbles or the delta is larger. That's showing me selling pressure, but they're not making any progression yet. Now, I'm clueless. I don't know. It's not my job. And then I rotate up into my resting liquidity here. So let's watch and just kind of see what happens. Again, I'm not breaking down. My buyers are here, here, here. Now, let's look over here. And this is just sort of what we call a sidebar. This is like you talk to the judge. I promise I won't do it again. Notice here, market comes down, and here I have a lower price by a little bit, less selling pressure. You see the difference in the delta? Now, this is delta divergence. It's just a comment. You guys all know divergence. And it's not a mechanical process. If I'm sitting here, I'm looking at this, and my teeth are starting to chatter because I know that this is getting important. It's important. Now, I can't tell, so until hindsight, what happens here. So I can't look forward. I'm only here, and I need this, and I'm seeing less sellers here. And I don't know if I'll get more sellers here. Look at the change in the delta and look at the change here. So that starts telling me right there, there's change taking place. And this is where my sellers were. I break high. Now my buyers have taken control. We're now above the sellers. So the way I kind of look at this is I'm narrating the market. I know I have a high probability of going here, and I believe it's around 80%. So, but what am I seeing? I got an 80% probability. I got my RTH open, and I got buying right here. I got sellers here. Look at the pieces. This is what it takes in my understanding of the market to try to get ahead of everybody else. And again, I'm clueless, but not ignorant. This is where my sellers are. If my buyers can get through my sellers right here, and I can hold this and maybe this, I then have the opportunity for a long if it's part of my plan. Watch. There's my test. This is an advanced process. So this is not where you start. This is really after you got everything else. This here is extremely aggressive. This is called an order flow trigger. So it's right here. Break high. So when it breaks high, here's what I know. I know, and I had a sweep here on the open, by the way, and a sweep often says, I missed that to tell you about it. Sweep suggests counter rotation. It's a process. So the sweep, I'm looking for this, and this is the key components there and there. Break high. This is an advanced order flow trigger, or it's nothing. You're sitting in your Barca lounger and your jaw's on the floor. Now watch. So now we want to get long. How the heck do we do this? This is called VPOC migration. I made it up. It's a structured trade that I made up years ago. Who knew? By the way, remember, if I disappear, if you're in YouTube, it will reset. It'll come back in a couple of minutes. When I come back, I'm in an unstable condition here in Costa Rica, and it's really problematic. I've had hardware failure going on here, let alone it being at the edge of the jungle. Presents challenges. So just so you know. And if you're interested in this, there is a link in the bottom of YouTube, And you're all welcome to the TraderLab. There's no cost for it. And there's a full library of webinars in their document section, and of course the TraderLab community. So this is the new retail price. Let's follow the language of the market. Advanced order flow trigger. You can vet these. Here's a sweep. This sweep is the same as this. Let's look at the behavior. When we get this kind of sweep, we are anticipating a counter rotation. What happens? Not so much. Break high, order flow trigger, long. Here I get a sweep, teeth chatter, break high. Where's my support? It is there, right here. This is support. Why is it support? My sellers were here. My buyers, I'm going to show you again advanced methodology. Hope you don't find this, a waste of your time. Just something to be interested in. So, order flow trigger. What is this? What is that? Aggressive buyers. And there's my seller. What is my seller? Not as strong as my buyers. Why didn't this go down? Order flow trigger, absorption. Sell delta. Who knows? Buyers. So what I can do with this is break here and buy it. And I can't buy it here because my teeth are on the floor and chattering. I can buy it on the way up. And then my stop goes under here or under here, subject to trade plan. Opening swing low. So that's the first long, okay? Now, let's look a little further. I get VPOC migration, new retail price. There's a couple ways to trade this in TraderLab. Now, this is moving really fast, so you might not be able to do this, but this is a structured trade. Now, what we know, and this is very important, the thing I have to always caution everybody about, doesn't matter if you're in TraderLab, if you're just out there floating on a raft somewhere in trading world, that is, trading is not mechanical. And I understand when we're learning to trade, it is mechanical because we're training our minds. But trading is not one-dimensional. It isn't, it's going up and I buy it. You need to know why it's going up. You need to understand statistical probabilities, which I've already pointed out to you. And you need to know when behavior doesn't happen with an 80% probability that that's meaningful. You also need to know the condition of the market. So, support. Sweep. What do we look for a sweep? Counter rotation. This is the counter rotation. Who knows? So subject to trade plan. There's your long. Now we come up going to the moon. What is this? Well, this becomes support, but this is really the area. This is called, and this is the mid in the VWAP. Now, the challenge here is whether this trade qualifies based on your trade plan. Let's assume because of the range, it doesn't. Okay, let's just assume that. If I got long here, my stop has got to be way out here someplace because I have structure. This marginal. So this might not be a trade you could take. But here's the condition that you're just changing into. Let's look at this in a multiple time frame. We already talked about the higher time frame, up, new all-time highs, north. We already talked about, in the ETH low, tested yesterday's low, too low. We already talked about that we're above the high volume price from the ETH. Who knew? And we didn't get there. We already talked about the sweep that did not go anywhere, and we talked about the absorption here. Look at the pieces. We already had a long right here, if it's in your plan. And now what do? Great question. I see the liquidity come in here. What is that? The invisible hand. What's the invisible hand? Skewing the book. Do they want to trade? No clue. The invisible hand. Except for us, with a high tier order flow tool, it's visible. What does that do to the book? It's like somebody, like a pot, and they're putting heat on the pot, and that heat creates pressure on the water, the order flow. So if it pushes it down, which is what I would anticipate, not predict, then my first level out here is mid and VWAP, and the market can do anything. So if this doesn't fit, it's nothing. But if it did fit and there was more range, This is called mean reversion. And if you're in a trending configuration, which this might be, in the TraderLab, you would know mean reversion is the way you navigate this, and that's outside in trading. Now let's come back to the profile. What is the language right here? I'm not paying that. Yeah, but it's on sale. Retail price, high volume. If I leave it, I create a new retail price. Here, let me do it over here. So, too high, remember the shopping, too low, fair. If this becomes too low, I come up here. And you'll notice, if you look left, and this is all this is, too low, too high, microstructure in the middle. Too high, too low. If that's too low, it's the same as that being too low. This is the profile. And now I move to another location. Too high, too low, too high, too low. And I know that's too low. Retail, I can break above it. When you understand how the market works and understand what is happening in here, you could start using these structures in your trade plan for support and resistance. And again, nothing is mechanical. Too high, too low, retail. I'm out of here. Higher, higher, going to the moon, pull back, pull back, pull back. So what do I know over here? High volume, too low. But what about here? Low volume, outside edge. Remember, too high, too low, retail. If I get long in here, I know there's stops under here, so I would need to be outside. Just telling you. But this is resistance. Let's watch the behavior. Now this pulls. Watch. So that's a trade, or whatever you want to call it. Whoops. Part of this jumping in and out has to do with my how I'm configured here. They'll come back. So market's going up, having a wonderful time. How do we get on this, Tom? Well, I'd like to show you. By the way, if you have questions and you're visiting in YouTube, I'm a bit challenged to see YouTube chat at the moment. You can post in Discord, and I am able to see that, but I'm not able right now. Okay, so absorption is here. Support is here. There's nothing going on, okay? So what we're looking at is the market is moving in a directional fashion. Certainly no shorts at this point. The trend is up. Subject to your plan, there is no shorts. Now, VPOC migration, we're going to label it. It's a variable high volume node. Again, I made this up because when I was figuring this out long time ago, I'm a researcher, so I'm very curious. You know, why does something happen? You kind of scratch your head and go, what does it mean? This is a language, okay? What I'm sharing with you here, the volume profile and, order flow, is a language. Now, let's look at this. This is a sweep. Now, when you get a sweep, of course, it means a number of things. This kind of sweep, this sweep, suggests up. Now, the time where you really want to see it is at the bottom of a rotation, not midstream. So it suggests a rotation. And you get your rotation. This is where the buyers were, and this absorption is where the sellers were. If I break down, that is suggesting this is too high in this microstructure. It's resistance. Now, what I'm looking for is, let's go back to what we know. Buyers are here. Buyers are here. There's your buyers. So you can see them, right? That's aggressive. What happened over here? The buyers are here. That's why? Because we didn't go down. Why didn't we go down over here? Well, the buyers are here. And there's another piece, more advanced. Similar to what I showed you early on with that advanced long. This liquidity here, and I don't have the stop and iceberg detector turned on so I can see what transacted here because of the trying to have this computer limp along. This break, and I can't see, so I'm only going to say maybe. When we break, this becomes support. This is an order flow trigger, maybe, but I cannot tell. This is the absorption here. Buyers are there. There's your absorption on the pullback. If I hold this and I break high, once I break these sellers, the reason you got a bubble here is there's absorption. And you don't know that until you break high. So you have the sellers, the buyers are still in control. The buyers are in control here as it relates to this, maybe. I got to say maybe because I can't see everything, but I'm going to just show it to you. And there's another piece here. This becomes an outside edge or low volume. Remember at the top of the stream, I was showing you how low volume can become an outside edge. So this is a trigger. Again, if it's validated, but I suspect it is, because this is resistance. You notice this is pulling. All it was doing is skewing the book. One of the things you need to learn when it comes to high-tier order flow trading with a tool like Bookmap is what it means. What happens when liquidity comes in the book and skews the market? Why might that happen? Here's something for you to think about. Is it possible if the market's going to go higher and a participant or participants want to buy, do they want to buy here or do they want to buy on a rotation that they might create by putting this liquidity out where everybody can see it who has an order flow tool like this? So if it skews the book and I get the rotation, they might be, it's like a pitcher and a catcher. There's a catcher on the other side who's going to potentially absorb the down rotation because the trend is up. Then when we come back in the other direction, they pull. You see it? Now this, I don't know if it traded out. Maybe it did when I break above it. And now my buyers are here. There were buyers there and buyers there. I'm spending time here so you can understand market mechanics. And now the buyers are above the sellers and above the liquidity. And even here, teeth are chattering because we could just do this. But look at the change. Rotation up. So what does that mean? Where were the sellers? There. And what else do we have? Outside edge, too low. Where's my micro volume, my structure? There. Just showing you something. These are advanced processes, but it's logical. Break high, order flow trigger, jaw on the floor, suspect. Buyers are here, only in hindsight. Buyers are above the sellers, and the buyers are here, and the buyers are here, and the liquidity trigger is there. Support above here, suspect, break high. What is this now, Tom? Support, long, VPOC migration. See, advanced. You can learn it in TraderLab if you find this interesting. Now, let's keep going. Now what? You remember VPOC migration. Let's come to microstructure. What is this? Too high, too low, retail. This is the same thing as that. This is for the whole day, where the highest volume is. Remember the shopping experience. If you go to the store, and instead of it being a slow auction, what would happen if in the store the prices were changing in real time? This is what you'd be seeing. Here, your can of tuna, $1.50. Oh, $1.60. $1.75. And the demand for tuna is there. So the high volume, and let's think of the full day as a supermarket. But when you're down here, you're in a shorter time frame, but this is the high volume in this. So this is the same process, but a shorter time frame. So what I'm doing is I'm taking multiple time frames, and there's no clock. Here's the difference with what is going on right in front of you. we all start in this business with time frames, and there's very logical, daily, fine, whatever, RTH, weekly, monthly, and everybody thinks of this in time. I don't. Time for me is relevant up until the intraday time frame, but it's not broken up by a human, shall we say, intervention of 5 minutes, 2 minutes, 1 minute. Now that's for me, not for you. I'm just talking about me. For me, I'm order flow oriented and I'm participant oriented. I'm interested in the story in real time. I'm not here with a stopwatch that says, wait, it's not 5 minutes yet or whatever, So I'm looking at the volume. Because when I showed you at the top of the stream, we had a candle with a wick on the bottom. What creates a wick? It's really the same thing. It's time. Because we didn't spend time in some time frame, but we don't know the volume distribution. So the candles are extremely incomplete because prices are not created equal. So a price in a candle, I can't see the distribution of volume in a candle. I might see a wick, and that wick might be related to the time of this body in a certain time of a candle. But I won't know in a candle about this unless it's a, 30-second one, and then I'm all over the place with noise. So obviously I don't do that. And just like you, sure I did it. I did everything you've done, and unfortunately probably a lot more. 47 years, you get to do a lot more. A lot of it, you wish you hadn't taken the time. But that's hindsight, right? So, too high, too low, retail. And if I'm lagging here, it's because of the GPU. I've tuned it down. Everything is like with a Band-Aid here. Hope you guys are doing all right. So the aggressive buyers are there. This is too low. That's a long. Now let's go up a little higher. What happened in here? Isn't there volume here? Let's look over here. Absorption is here. Buyers. What's up here, Tom? Sellers. Absorption. Resistance. Support. Support. Sweep. Looking for something to go up. Goes lower. VPOC migration. New retail price in the supermarket. This is a developing daily time frame. And the microstructures are here and here. Okay. So I could put these together, and again, I don't know. There's absorption. Don't know. Resistance is here. You got to be kidding, Tom. Sellers are there. Buyers are here. Sellers are here. Resistance. Buyers are here. New retail price. Break high. Resistance is there. Absorption. So that would probably be an iceberg selling. Rotation down. What do I know about this? Too low. What about this? Buyers are there, buyers are there. So I'm narrating and following the market. We move up, having a great time. This is a challenge right here. Resting liquidity in the book. I can see it before we get there, and I get a sweep. This suggests counter rotation. My retail price is here. This is too low. This can be my support now. This is my new retail price. If I'm managing a trade or looking at putting a trade on a location, and I'm using the retail price as I think of it, or the previous one in a developing time frame, my risk will be out here. So if I trade in here, and this you have to bet this, my stop would be under where the buyers were, or under where the buyers were. You see, it's not going to be with a toothpick and a scalpel. That's an easy way to get your trade taken out. I have a sweep here, new retail price, break high, new retail price, going to the moon, Alice, let's watch, and a 67% probability, that's the statistics from the top of the stream, to go there. Is this making some sense? So what am I doing? Trade plan, I'm aligned with the condition of the market. I'm monitoring the condition based on the participant behavior. I'm seeing the absorption. I'm seeing the behavior. I'm seeing the developing retail price move higher. I'm trading with statistics. I have settlement as a statistic, but my primary statistic, and again, what is it? Top of the stream. Statistics. You have to vet these for yourself. 68% probability. What else do I know? 80% probability to get to the ETH volume point of control. Too low. If yesterday's low and the ETH low tested it and it's too low, and Friday or yesterday's retail price is here and the ETH retail price is too low, is it logical in those time frames that this is my 68% target? And there's another one before you fall asleep. What is it, Tom? ETH high. Because what did the ETH low do? It tested yesterday's low. So if yesterday's low is too low, yesterday's ETH low, or today's ETH low is too low, wouldn't that suggest 68% probability? And what's the possibility of this? Taking out the ETH high or low has a 97% probability. Would you go for that? Yes or no? And there's one other one, and none of these are trade recommendations. Yesterday's high or low? 87% probability. If you know these statistics, and if you're in TraderLab, you would, what would you do about it? Now, I'm going to show you another trade. I'm not sure where it is. Okay, watch. So this, you'll notice the retail price has been going up, having a wonderful time, going to the moon, got statistics here, here, and up the financial food chain. Let's look at change. So you'll notice how this is moving higher. So the retail price in your supermarket or higher time frame is higher. Now right here, I get the sweep. And now let's look at this sweep. This sweep, so we have a buy sweep here, sell sweep here. So this says potentially counter rotation. Sweep here suggests potentially counter rotation. It's not at an outside edge, so it doesn't mean as much. This means more, and it doesn't happen. This becomes potential support. Break high. Going to the moon, having a wonderful time. VPOC migration. Now, right here, I get another sweep. So, and this comes into the book, and that comes into the book. Let's look at behavior. Now, we hit this, and instead of going this way, we break down. This is the first suggestion of a change in behavior. Let's look at what it is. This is now a variable high volume node. What does it say, Tom? Maybe that's too high. So this is the first suggestion for me of a counter rotation that might be meaningful. And again, remember what I'm saying, might. That means maybe. And maybe it will, maybe it won't. I have no clue. But let's look at what I know. Not what will happen, what I know. Too low, too low, too low, too high. Okay, now let's come over here. What do I know? Outside edge, low volume node. Remember I showed you in the higher time frame, same thing. High volume node, too low, and there's where it is, and another outside edge. I also have an outside edge here. So in an uptrend, if you're in TraderLab, there aren't that many ways to participate if you want to get aligned with the trend. So what we have is a, let's just say the context in the developing time frame is up, the trend is up, 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 up. How do you get long? You need a counter rotation. So what does this look like? Well, the process is called mean reversion. And I got to always say this. What's mean about it is where's the outside edge. So what you're going to try to do is identify an outside edge to come back here. Okay, so that's the mean. This is also the mean, but this is the current price. This is the price that was too high. Now, I see these sweeps. What do we know about these sweeps? They often are ahead of upside rotations. And there's no precision, and it doesn't have to do anything. Don't forget that. These are ahead of upside rotations. These are ahead of downside rotations. And there's no downside rotation. You have this ahead of a downside rotation. You get this sweep ahead of an upside rotation. You get too high. You get this sweep ahead of an upside rotation. But this is too high. liquidity. I'm putting pieces together and I'm clueless. Now we have a structured trade in the TraderLab called VWAP to VPOC. It is a reversion trade, and you have to vet all these for yourself. And unfortunately for all of us, nothing is mechanical. What it is areas of potential behavior. So you don't just put an order here and hang out. Wouldn't it be nice? Doesn't work that way. But let's look at what we know. This is too low. This is too low. Let's just watch. This is process. This is a way for you to learn how to break the market up based on the behavior, not your indicators. I don't use any indicators. For me, the participant behavior in the order flow indicates what's going on, not a backwards looking oscillator or anything else. Now, I'm not saying you can't use them. For me, all they did was create noise and conflict. I'm a minimalist, so I don't want anything on here that's a problem for me. So what do we know? That's support, but I have no range. So in this scenario, I can't buy it here, but here's what I know. My sellers were there. My buyers took control. So this is support. Why? There was demand there, okay? But I don't have a trade here. I have a location to observe. If this location was out here or wherever it might be, then, and I had structure, then I would be stalking it for a long to come back to the mean. This is the mean, but no trade. I do have structure, but no trade. So let's watch. My structured trade is here and here. Now, we had a conversation about this in TraderLab. I think I'm locking up here. Hold on. So this is a structured trade. Let me explain how this would work. Now, this is advanced, and this is something that if you're not familiar with auction mechanics and trend or context, then this might not be qualified depending on where you are. We're working with a 68% probability to go here. We're working with about a 98% probability to go there. And we have yesterday's high or low about 87% probability, wherever that is there. Okay, so these are all trades that would be qualified in TraderLab, and you would know this. Now, what happens? So this is a structured trade. Let me show it to you. Now, to qualify this trade, let's look at the location. You've heard this in real estate, location, location, location. What's this? No good. But what about when the VWAP catches up and we have confluence now? Now, here's the trade. It's there. And I'm going to show you where the stop might go, at least for me, not you. If I get long, so you know, I will not be able to get long here or here. There's my buyers. My stop would need to be here, under here, because this is the last place here where I had my buyers. So my volume would be here. You see, previous retail price, too low. So if this is the previous microstructure, and I know you're going to look at this probably in your eyes roll back in your head. It's structure, guys. It's shopping. Where's my indicator? I don't have one. What I have is participant behavior. I have a sweep. I have absorption. This is all order flow. I have my buyers. No clue because my sellers are here. There's the absorption from the sellers. So I got sellers, I got buyers, and I break high. The buyers are in control. Where were the sellers? Weren't they here? So you've heard the concept, resistance can become support. There's my retail price. There's my retail price. There's my retail and VWAP, and here is my scale. This price. Mean reversion in a microstructure. What is this reversion? Outside in and too low, new retail price, new retail price. Too high, I'm not paying that. Yeah, but too low. Back to there, then there, and overnight high, 98% there, and then 87%-ish, not a recommendation, there and north. Is everybody with me? This is TraderLab. This is an advanced trading methodology that might be one of the more simple trading processes because it's built on shopping, not prediction, not indicators. Are you guys with me? How are we doing in YouTube? I hope you guys are getting something out of this. By the way, if you are in YouTube, I do suggest you review the past 2 or 3 streams because I give the rationale for setting the day up. We look at the ETH because that's the most recent auction, and then we place all these pieces together in alignment with what's happened previously. That gives us the possibilities for today, not the predictability, because you're in a business where there is no prediction. The business of trading is alignment. And the more you understand how the market works, which you can learn in TraderLab, the more edge you can derive. Then it's trade plan based. In other words, when this shows up, you show up. No decisions are made here. They're all part of your plan. And basically, you bring your plan here. And then the market opens and your plan directs you what you do. You don't make it up as you go. Isn't that kind of hard for us? Because we're going to impulse in, our emotions take over, and that'll put you out of business. Just remind yourself what it means when you chase the market, you wait for confirmation, you move your stop away because you don't want to lose. That has nothing to do with this business. That's all emotional triggers. So you need to learn really about yourself and the market. You can do that in TraderLab. So 87% probability we're looking for a new, all-time high. This. And then after that, you put your helmet on. And then, so subject to your plan, and this is trade plan specific. Let's come back out here. Where is our support now? By the way, well, it's down here. This is the retail price, right? Too low. Oh, it's on sale. I'm not paying that. Resistance, retail price. What happens though if this is the now multiple time frames as you'd think of it without the clock? This is the retail price or highest volume from Friday. Well, if this is too low and maybe this becomes too low and I have this is an outside edge. If I come outside, and this is not a trade recommendation, I can look at this area to get long back to the retail price, mean reversion. You see? This is mean reversion, outside back to the retail price. And because of the uptrend and the statistics above me, this is my scale. I posted this in TraderLab. Why? Because I have a 67% probability of going here. And there's another thing I forgot to mention to you. At 9:30 Central Time, we have something called the IB stat, first hour high or low. There's a 98% probability that will take out either the first hour's high or low. Now, if you're going to take a wild guess, which one would it be? Would it be the first hour's high or low? Well, everything we know says potentially. I'm always going to say that. 98% probability to take this out at 9:30 or later, and a 67% probability to go there, and a 98%-ish probability to go there. Can you see how understanding the market, working in a professional environment, and 87% probability to go yesterday's high, which it doesn't have to do, but that's how you put your trade together. And then you put your helmet on like we all do, and the outcome's going to be random because nobody knows, right? Let's go back to the auction. What do we know? Too low, variable high volume node. retail price. This was too high. If too high now is, watch, let me show you another little trick, as they say. Maybe. There you go. What is this? Notice the structure. Maybe. Here it is. Subject to how much, and this is not 6 months, guys. Don't even think about it. If you're in a hurry, wrong business. This is intentional. You want to play on a first-tier sports team. You want to be a surgeon. You want to be play at Carnegie Hall. This is Carnegie Hall. And you don't start doing this. Let's watch. So here, 9:30 Central Time is where we get the IB stat. So whatever the first, and this is 9:30. So the high is right here, 9:30 Central Time here. So this is our first hour high. So we have something called the IB continuation trade. So we have this is along, we have this is along. It's structured. When you break the IB, which is this, we break the IB here and we pull back out here. This can be along here. And let me show you a little more of it. Now, guys, remember, don't you wish there was perfection? No, this is trading. It's slop. And the slop is created by momentum. In other words, sell stops or, whatever. So as the market rotates up, there's going to be sellers trailing stops. That's part of what creates these rotations. But if the trend is up, now I have something called the IB continuation trade. This is in those 60 PDFs I share in TraderLab, as well as a library of webinars and a document section and the TraderLab community. And if you're visiting in YouTube, remember, you have a personal invitation from me and the TraderLab community to visit TraderLab and join a serious, professional, business-oriented community. It's not romper room, so if you're used to being in chats where it's ridiculous, we don't have time for that. If you want to build a business, it's serious, and we all got to work hard to overcome the elements that take most developing retail traders out of the business. It's going to be the hardest thing you ever do, and it's not hard to learn how to trade. It's actually hard to do it. And the reason it's hard, it's not because it's complicated. It's actually not complicated. We load indicators on, which actually creates complexity, conflict, and no edge, believe it or not. But every indicator has random winners. That's what keeps us trapped in trader Groundhog Day. Work hard, wake up in the same place. Gee, it worked last time. Let's tweak and tune it. It'll work a little better this time. We've all been there. We've all done it. And by now, you might have discovered it doesn't work other than randomly. So you could have a random buy-sell generator on your desk and you still have winning trade. That's got to tell you something. Gamblers in the casinos have winning hands. But let's take it from the other side. How do the casinos operate? They absolutely play their games exactly the same way. They don't have random inputs to how they play their game because their game is created with an edge, or else they don't play the games. What we do is we trade without an edge. Well, if we don't have an edge, then we're in the same boat as the gamblers. Random winners, but over time, we're just going to lose. And neither of us have an edge. The gamblers don't have an edge, and if we're the gamblers, we're sitting with them, right? And our dollars are going to go to the other participants that we're trading against who have an edge. Isn't that common sense? Most likely, if you're not a consistently profitable, sustainable trader, in spite of winning trades, winning days, winning weeks, it could even be winning months, you're on your way out of business. So you got to decide, do you keep doing what you do and you get the random winners, what keeps you doing it? That's what I did, Trader Groundhog Day. Or do you put a stake in the ground and say, well, I've learned a lot, but I have a lot of trapped equity. But if I keep doing the same thing, should I really think I'm going to have a different outcome other than more of the same? Think about that if you haven't. So what do I know? 9:30 Central Time is the IB. I break out. This is the IB continuation trade. Where's my support? It's there. Too low. See? So this is the retail price. And actually, I'm sorry, too high. I break above it. Now it's too low. This is support. I can buy this, any of this, and my stop needs to be here, or I can put it here once I clear. Up to you, not me. That's your trade plan. So where's support? Here. Remember, old concept. Resistance, break low, break high, resistance becomes what? Support. If you understand the concepts, you'll already know not what will happen, but when you see the absorption right there, the sellers are absorbed. What else do we know here? The sellers were here. There's the buyers. Look here. Look at the buying. Isn't this rotation different than the down rotations now? These are the pieces, the elements. Look at the buying. Look at the support here, right? Resistance, support, break high. What's that? Resistance, break high. Resistance becomes what? Support. Resistance becomes support. Retail price, previous support, potential resistance, either breakdown, but uptrend here. So if you buy this, you scale there, break high, support, continuation long or nothing. You're just sitting in your Barca lounger. This is a key piece. Retail price from Friday. What can I do with that? Support. That's it. Are you guys tracking? This is TraderLab. And again, no secret sauce, no holy grail. This is called market logic. This is understanding the auction, which is essentially what the market is. The market is an auction. This is our next target, not a trade recommendation. And then put your helmet on because we have no reference points. We only have measured moves up above. How are you guys doing? We doing okay? Steph, we did touch the IB high. I'm not sure. Did we touch the IB high? Let me look. This is 8:30? No. I don't follow what you're asking me. Maybe I already answered it, Steph. How we doing in TraderLab, guys? Let me know if you're getting the chat or if I'm getting the chat here. If you're in YouTube, guys, use the link in the bottom of YouTube. If you want to visit TraderLab, there's no cost for it. You don't have to be a Bookmap subscriber. You just have to be a serious trader. I'm not getting anything here. Let me see, 11:33. Steph, did I answer your question? Okay, thanks, Matt. Oh, thank you, Dan. Guys, if you're in YouTube, maybe someone can post a link for them if they want to come to the TraderLab, and I can answer their questions there, just due to the situation I have here in Costa Rica. If you have questions, post them or come to TraderLab, in your travels and say hi. And by the way, Ned, if you're in there, thanks so much for curating the library in the TraderLab for us, organizing it and keeping it up to date in case you're floating around. And everyone who's in the TraderLab, appreciate you guys and all the contributions. There's the thing that goes on in TraderLab is there's data mining, of course, psychological support, as far as the elements. The idea of TraderLab is to help traders differentiate between the fantasy and a lot of the influencers and the nonsense and other educators out there who may or may not give you ideas that are actually usable. You have to vet everything for yourself. I'm going to be the first person to say that trading isn't for everybody, and you're going to discover things about yourself that you've never had to deal with before. And it's not anything other than our primal wiring and how it overwhelms you. I know for years for me, I would have intention. I'm not going to do this. I'm not going to bail out. I'm not going to move my, all this stuff. And I'd still do it. And the reason it would happen is this primal drive supersedes your intentionality. It's the thing that triggers you to jump out of the way of a bus without having to process it. It is that primal thing, and it's great for survival of the species. But when you're sitting over here, the IB high was set at 9:58. No, the IB high is set at 9:30 Central Time. That's it. So there is no 9:58 for the IB. So the IB is set at 9:30. Let's go look at that. Unless if you post something, make sure, because now I'm going to go take my time. I'm going to go look at it, make sure that what you're posting is correct. So this is the IB high. And so it's here. This is the first hour's high. So that is the first hour's high. And this is now 9:30. So now this is a structured trade. It's called the IB continuation trade. So let's see. I break right here. So now this is qualified. This is also the target. So I had 67% probability to get here, 98% probability to beat this, break this. So these are in alignment. 98% probability to go there and 87% probability to go there. So long. Still chance it gets stopped out, thrown under the bus, right? So this is the IB continuation trade. Break high. Now, the other thing is, we know that this here is all on the hit parade. So we could be, anyway, for me, I'm just going long. I don't have a short. Doesn't matter, does it? So we're current now. So if you guys have questions, post them. If you're in TraderLab, post a question. I'll do my best. And please forgive me. I've got this this laptop basically hanging by its toenails off the edge of a cliff. It is definitely on the way out. And I want to thank those of you who helped me tuning and tweaking. Furs spent some time with me over the weekend. He knows hardware pretty well, and of course ChatGPT certainly knows hardware pretty well. So I've been very challenged with this since beginning of December. So this has been going on, and unfortunately I cannot get another laptop in Costa Rica that matches what I need here. So it is amazing that I haven't crashed yet. I should be knocking on wood. So anyway, that's where we are. And as far as I know, which doesn't mean it will happen, only what it might happen. Let's come back to the language of the market. What was the potential here? I already mentioned it, but what is it? This is support. This is an outside edge. Continuation trades are outside in. It's called mean reversion. This is the same trade from a different area, outside in, mean reversion to there because of the context. This is continuation long going to there, 98% probability, and then previous high, 87%. Now, what do you do with this? Good question. Where's my last location where my buyers were? See the aggression. It's going to be here. So if I'm getting long out here, I'm not putting my stop here. Why, Tom? Because everybody's putting their stop there. And that is what you can get. Stop pick and then continuation. You have to think like this. Now, what's our natural process in our mind? Let's talk about it. Unconscious, I should say. Your unconscious motivation, that invisible wiring, primal wiring that's operating under the hood, without your conscious awareness, you know what it is? Put your stop there, put your stop there. Why would you do that? There's only one reason: risk aversion. Why are you risk averse? Because you're wired to stay away from the saber-toothed tiger. How does your psychology experience this random rotation? Fear. Fear. So if you can't predict because of randomness, you're constantly in a state of fear and apprehension. This is what's happening if you're out on the tundra and is there a saber-toothed tiger? Your primal wiring does not know what this is. It knows uncertainty. That generates cortisol, anxiety, and epinephrine, and what else is there? Adrenaline, ready to react. So when you see this, you're triggered to bail out. Oh, they're going to take me out. I'm going to move my stop up the blah, blah. Now, the question I'm going to ask this astute group of traders, why? Is it because it's good practice and this is where you have a yield? Or is it because your understanding of market mechanics is being totally overwhelmed by your chemical reactions to it? It's a question. And I'm going to tell you, you can get those answers in TraderLab because it's something all of us have to face and we don't understand it because you're doing it without understanding why. What happens if in the trading business, you need to be out here? And yes, the fear is that you're going to give this back. Well, how about the 87% probability is really what should be the driver in a random distribution of outcomes, not your fear driving the bus. Does that make sense? So how do we manage our fear? Well, for me, this is where the buyers took control of the sellers and they overwhelmed this is where resistance was. Let's draw a little line where the resistance was. Let's just keep this simple and random. See if you don't see something interesting. See? So if I know this is resistance and my buyers take control, now I come back here, this is a sweep and this suggests an upside rotation, does not necessarily, suggest a long, though this could be a long if it's in your plan. Why? Because outside edge and this. So I could, which I won't, but I could, if it's in my time frame, get long here for there. Or not. These aren't trade recommendations. I'm showing you what you can do if you actually understand how the market works and basically the auction, because this is an auction. What's too high, what's too low, who knows, and in what time frame? What time frame? Absorption. Where were my sellers? Here. Absorption. Sellers are here. Buyers are there. And there was my sellers and my buyers are there, which doesn't mean I won't go lower. So if this is the outside edge, my stop is not going to be with everybody else. It's going to be maybe over here. And you have to vet this under the IB. And if it counter rotates and takes me out, the lunatic under the hood, who I call Hyde, you've heard of Jekyll and Hyde. Jekyll's the professional, Dr. Jekyll, analytical, calm, intellectual, philosophical, and Hyde's the lunatic, the opposite. And I think a story that's based on that is The Incredible Hulk. Emotions get angry and this monster comes out. Well, we have Hyde in us, the monster. The monster takes over, and the analytical, logical self is buried, gone. And now you're left with the lunatic who takes control. Isn't that what happens to you? That's why I decided to name that behavior Hyde. Because now I see it as an individual part of my psyche. It is part of me and it's part of you. That's why the species has survived. What's behind the rock? Let's be sure there's no saber-toothed tiger. Let's look for certainty. Let's use indicators. We don't want to be wrong. We need approval. We need to be right. It has nothing to do with this business. Yet, we take that need for approval, the need to avoid risk and behavior. All of that is what we need. It has nothing to do with the business, you see. So you got to realize you're not in the world, you're not on Earth anymore. You're in an alien environment. And the things that work outside of trading don't work in trading. But our nature is to bring our success and whatever, that we've used that's worked to get us to a place where we might be able to do this business and then apply them here. So more indicators, more certainty, avoid risk, get approval, be right. What about if you're not in an environment where any of it exists? In fact, those things are what are going to take you out of the business. How do you rewire yourself to operate on Mars? So that's training, understanding, development, being in a professional environment where it's no nonsense. I can assure you TraderLab is no nonsense. I've trained many, many traders over the years. I've been doing this 47 years. I don't have all the answers, but I certainly know how to trade. And traders in TraderLab, many of them who are all developing traders, including me, have changed their outcomes because they had to change their beliefs about what the business is. Because we all believe it's one thing, and because of the randomness, it seems true, it's validated. But what about if it's just gaming? Nothing more complicated than gaming. And if you isolate behaviors that repeat in the market, even though the outcome is random, if you only get involved in those specific behaviors that are in alignment with the market condition, which changes, by the way, and you know that those specific conditions have a statistical probability that favors you, isn't your job just to show up, put the trade on, and look at it as a curiosity as far as I wonder what the outcome will be this time, And the idea of TraderLab is to help you build it. So you come into the market, everything you're going to do, everything, but you have no idea what the market will do. So the casinos know everything they're going to do when they play a specific game. They have no idea what happens when they deal the cards or how gamblers play the cards. So the control exists exclusively up until the point the card leaves the deck. That's the same thing as our control exists exclusively and completely with us until we click the mouse and the trade leaves, goes to the exchange. Does that make sense? That's a simple analogy, but if you want to understand the business, that is the business. So now we need to solve for that. That's what trade plan is about. That is what waiting for your trades and understanding market mechanics is about. This is market mechanics. Do you understand why this, why that, why that? Can you learn this? Yes. Now, this is an advanced methodology. Now, I always think of the terms when someone says, gee, this is advanced, I want something simple. I want to ask you, is there anything more simple than going to the store and shopping? You do it every day, most likely in some fashion. Think of the store as an exchange. It's just in a slow time frame. It doesn't change much. What we've done here is compress time to this, to rotations. But this is the same thing. Does that make sense? Hope you're getting something out of this. This is a TraderLab. And this is about the business of trading, and it's open to everyone. I'm getting something here that somebody's IB was set at a different time than mine. Are you saying that my IB high is not accurate? Oh, it is, Steph. So what is this about this IB high that's being posted? I'm a little confused. Because it's possible here in Costa Rica that, things get weird. Those of you who don't know, I'm having a hardware failure here in my computer. Normally I trade with multiple monitors. I'm barely able to get one going here. It's accurate? Oh, okay. All right, Steph, thank you. And I'm reading the chat on the phone. So that'll show you what I'm doing. So the fact I'm streaming it all is kind of a nice thing, I guess. Notice the support. Notice why. The thing about trading is, do you know why? You don't know if. So that's not part of trading. Do you know why? It is not because your line crossed over on your indicator. It is absolutely not why. You want to understand why. Not if, but why. Because if is always going to be with us. Are we going to get here before we go down and take everybody out? Well, I'm going to say I have no idea. But I do know I have an 87% probability, so I'm willing to lean on that. How about you? Past performance not indicative of future results. Now I have something else. I have a possibility of going here, not a trade recommendation, and we just might get up here and then counter rotate. Because, and here's a couple possibilities for you just to consider. And again, I have no idea, so I don't think I know anything. I know this is important, and I also know we can get profit taking ahead of this high. I also suspect we don't have what you would call shorts sitting up here to give us a fuel, so you might get a rotation ahead. It doesn't matter. If you have a trade management process, you could then be tightening your stop up. And where's the answer to all the questions? It's in your trade plan. Remember, you come to the market, you're not going, what should I do? The question should only be, what is the market going to do? So you know what you will do. You come to TraderLab, the job of a developing trader is to have all the answers to their behavior, not to the randomness of the market's behavior. So this need of being right and predicting with all our basket of indicators, all it does is create conflict, ambiguity, thrashing, and in my opinion, it's the door out the door. Again, just an opinion. But I did build trading systems in my career. I did manage a substantial amount of funds. I had my own office, my own company. I run a trading desk, trained a lot of traders over the years, and also had to deal with myself in my learning. And unfortunately, it took years longer than I ever thought it would. And and part of that's because there was nobody doing off-floor trading when I started in 1980. Everybody was a floor trader, and that's where I thought I was going to end up, but I didn't. So neither here nor there. What is important is to understand why retail traders fail. And I always suggest that you take time and some introspection and try to determine if what you're doing is what they do, and determine if the random winners are keeping you trapped in Trader Groundhog Day. Because if you open your trader toolbox, there's 150, 200 indicators in there. And now I ask the question, why are they in there? Because they all have random winners. So then our nature is to tune, tweak, add more indicators to create more certainty and squeeze the risk out. Well, when you put random indicators in a random environment with random interaction, what do you get? To be polite, garbage in, garbage out. There's no edge. There's just randomness. So you're stuck in this random cycle of randomness. Something needs to be anchored. And that's what the casinos do. They only play games with an edge, with anchored inputs. In other words, they play them exactly the same way. They understand the cards are random. It's the same for us. Determine the structured trades. Only get involved when the trade shows up that's vetted, that has a statistical edge. Accept the random outcome, same as the casinos do. Instead of it being a, oh, I'm right, I'm wrong scenario, it's a statistical probability with a random outcome, and losses, if you will, are not errors, unless they are. They're overhead and cost of production. Isn't that a better way to experience trading? Does this make sense? Please give a like if you're visiting in YouTube. I'm out of time. Appreciate you visiting with me today from Costa Rica, and I'm glad we didn't have any problems. If you want more, use the link in YouTube, visit the TraderLab community. There's no cost for it, and it might be one of the most important stops on your trader development journey. Don't forget to give a like, and I look forward to seeing you guys tomorrow. And also, I look forward to meeting you in TraderLab, and thanks again for visiting. Appreciate your time and interest, and thanks for visiting the TraderLab today.